Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 17th of the 9th, 2021. The time is just gone 0440, 20 to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Yesterday, Thursday the 16th, we had the positive unopposed driver in the dollar at plus 134. No backdoor flows, the opposing negative flows mainly coming out the euro at minus 76, out the pound at minus 38, and the yen was the negative rock at minus 20, activity plus or minus 134. Intra-week then, this is the most relevant because it's Friday today, and this is from Monday the 13th, open to about 15 minutes ago. We've got a positive opposed driver in the yen at plus 136. Front and back door flows mainly coming out the pound at minus 124, out the euro at minus 111, and the dollar was the positive rock at plus 99, activity plus or minus 235. Right, so yesterday we had dollar strength dominating. It was the unopposed positive driver, and the opposing negative flows were mainly, so we had dollar strength, euro weakness, pound weakness, and a bit of yen weakness as well. Excuse me. Over the week, we've had the yen positively driving in an opposed manner. So the yen's been strong and it's starting to come off now. And we went fully short the yen complex just after the retail sales print. Anyway, that's another issue. Right, so that's where we are there. Intraday. So this is the Asian session to about 15 minutes ago. We've got a negative unopposed driver in the yen, minus 39. Front, no backdoor flows, sorry. And the opposing positive flows going into the dollar at plus 27. And the euro and the pound are the joint positive rocker, positive movers at plus 6 apiece. Right, so we'll stop it there and write up the flow. Right, we're back, we've written up the flows then. So the euro is strong except against the CAD and the Swiss. The yen is weak except against the New Zealand dollar. The pound is weak except against the yen and the New Zealand dollar. The Swiss is strong across the board. The CAD is strong except against the Swiss franc. The AUD is weak except against the pound, the yen and the New Zealand dollar. The New Zealand dollar is weak across the board, and the dollar is strong except against the CAD, the Swiss and the euro. So what have we got then? We've got Swiss strength across the board, and we've got New Zealand weakness, and take your pick in the middle. So that's the Asian flows. What's going to knock it about? Well, we've got tier 2 events in GBP retail sales today. We've got tier 2 Euro CPI inflation data, and we've got tier 1 Michigan consumer sentiment. Right, if you remember yesterday we had strong US retail sales. Right, so we'll stop it there and write up the asset classes and then do the final analysis. Right, we've written up the asset classes then. So the dollar index then, it's been pumped right up. It's 0.10, 10% off the modelled high. Gold shouldn't like that. It's now 0.40 from the floor, so it's 40% above the floor. And oil is 0.29 from the high, so it's nearly 30% from the high. Wall Street, S&P, and the tech, they're all off their highs, but they came off and they're thinking about coming back up. Wall Street 0.36 from the high, S&P 0.15, and the tech is 0.17. So that's where we are there. US 10-year then, this is the price. The price has been thumped down, so yields have been coming up in the US. It's 0.28 from the floor, 28% from the floor. And the bund is even relatively been pumped down more. It's a stronger, it's 0.12, 12% from the floor. So relatively speaking, European yields are outpunching US 10 years. And we're seeing a little bit of resistance to the dollar strength in the euro dollar. Right, copper, very choppy, 0.43 from the floor, soft, still range bound, and the US steel is half marks, 0.5. So we'll get rid of that and then we'll do the final analysis. As we say, yesterday we had, due to the yen being positioned heavily to the positive side, and we had these. We had all the signals for us to go short the yen complex. We went short all the yen pairs, 7 yen pairs, and we're currently about 70 points. 70 points up, which is nothing really, but it's a start. Right, so let's have a look at what's been going on then. So the dollar, the euro, the yen, and the pound. So yesterday we had positive retail sales in the US. But the key thing is this sort of is this taper argument, and we've got the Fed meeting next week. So that's really the driver of dollar strength. It's the idea that they might taper early or at all, and we've got strong retail sales. And so on, and then this is sort of leading to this sort of sub equity high scenario, and obviously the yen transmission. Normally, when equities start charging up, the yen goes the other way, and vice versa. So that's where we are there. The euro is at the opposite end of the dollar really. But the euro is behind the radar. The euro is sort of getting stronger without actually getting much benefit from it because of the strong dollar. And so if you look at the flows then, so yesterday we had a positive unopposed driver in the dollar. So everybody was just piling into the dollar, and the euro, the pound, and the yen were going down. And over the week then we've had a very strong yen. Which was yesterday was the unopposed, no, the day before, intra-week was the day before, was the unopposed positive driver. The yen starting to come down through the gears and starting to weaken in relative terms, and that's one of the reasons why we went fully short the yen complex, but there's more to it than that. But anyway, that's where we are. What do we think is going to happen today? Well, we've got this we've got minor pound data and euro data early on. Then we've got this Michigan consumer sentiment. But really, it's all going to be about lining up for next week's Fed meeting. It's Friday, so and the chances are we're going to see, we believe, a good pump up in equities. The yen complex softening continuously because it's got a lot of elbow room to go down. So that will be our take. So it's going to be yen weakness, we think. As the main feature of the day in terms of trading. So I hope that was useful. It's Friday today, so see you tomorrow for the weekly review, which is the data cycle and the flow cycle. If not, see you Monday. Thank you for watching.